There we go. Good morning, traders, and welcome to today's live session. So, as always, I want to start today off with a bit of a question. So, tell me, what do you call a market where the dollar is once again under severe pressure, while at the same time the yen is torn between the Bank of Japan and risk sentiment? Then we have cryptocurrencies where we are seeing Ethereum is trying to recover from a 10% smackdown, and the Dow is digesting weak manufacturing data and even some Bitcoin drama. Some people might call it volatility. I call it a Tuesday. Before you place your next trade, trust me when I say you are going to want to watch this. Good morning, everyone. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where each morning I break down the biggest market drivers across currencies, commodities, and indices, mixing fundamentals and technicals. And just enough common sense because, let's face it, markets don't always make sense. So let me assist you in making sense of these markets. So I want to kick things off today. Obviously, as usual, let's just get the T's and C's out of the way. So for everyone here today, please remember that everything shared during this session is for informational purposes only, and at no point during this session will I be providing financial advice. As long as we are all clear on that, this is going to be a great session. So if you have any instruments or anything you want me to analyze and want my opinion on, you are free to ask. Pop me a message in the comment section. I'll be happy to look at them for you. If you can't comment, it's because you haven't subscribed yet. So please remember to smash that subscribe button. And while you're at it, just click on that like button as well. It's just for me. I really appreciate that. So as I said, kicking things off today with currencies. Now, we spoke about the dollar under pressure. Now, the dollar index is holding around 99.4, dropping below that 100 level. And this is after touching a 2-week low yesterday. Now, markets are leaning harder into the idea of a Fed rate cut next week, which will take place on the 10th. Now, we also saw the ISM manufacturing PMI showed that factory activity is shrinking for the 9th straight month. Just digest that for a second. And at the fastest pace currently in 4 months. We are also seeing, as per the CME Fed Watch, that markets are now pricing in about an 88% chance of a 25 basis point cut at the upcoming Fed meeting. On top of that, there's political theater in the background. The US president has said he's chosen the next Fed chair, with Kevin Hassett widely reported as the leading candidate. Now, markets are watching Powell's comments later today for extra clues on the Fed's outlook. Then on the Japanese side, so looking at USD JPY, the yen recently rallied on rising bets that the Bank of Japan may hike rates in December, signaling a possible shift away from their ultra-loose policy. Now, the Bank of Japan governor has also hinted that the chances of meeting the bank's projections are also rising, with inflation above the 2% target for over 3 years now. Bond yields are reacting as well. 2-year yields are up near 1%. Long-ended yields are pushing higher, and even 30-year yields are at record levels. The Japan finance minister has also warned about erratic Forex moves, keeping the idea of a potential intervention on the table. So in essence, USD JPY is caught between a dovish Fed narrative and a slowly normalizing Bank of Japan that markets, well, just can't ignore. So it's like watching two central banks play this tug of war with the same currency pair. Now, if we have a look at the charts here today, USD JPY is trading currently around 155.95, up about 0.2% from the previous session. And this is after bouncing from that low point here at around 154.65, which also marked a 2-week low. Now, the recent pullback from up here at 158, which was our latest swing high, has been unfolding within this downward sloping channel that you can all see here as well. And the area around that 154.8 also lines up quite nicely with the 78.6 Fibonacci retracement level, which is drawn from of the January upswing and is acting currently as key support. I'll just show you that here as well. So basically drew that in from this high point that we saw here on the 10th of Jan this year. So basically just using those fib levels as well currently as key support and resistance levels. Now on the downside, the 151.6, so that is this 61.8%, is currently acting as our largest support zone to watch. Where on the upside, we've got this 88% fib level here at 156.6, which is acting as our near-term resistance. So if we can actually break through there, that would kind of reinforce a bit more of a recovery mindset for USD JPY. Now, above 156.6, the next resistance comes in at 159, which is basically all the way up at that previous high point. So that comes in around here, which is that full retracement back to that high from January. Now, this being said, in short, the pair has bounced, but until we see a break of structure here, and a convincingly break of structure, it's more of a corrective move than a full trend reversal. Now, if you have any questions for me, please feel free to pop them for me into the comment section. I'll be happy to answer them. Rocast, I also saw your message. Thank you. Welcome as always. So having a look at a more intraday perspective here as well. So let's drop this down to like a 15-minute time frame. Now, just want to make sure that this stays up. There we go. Let's head down to, there we go. Okay, so here we can see on the 15-minute, we are actually now trading very nicely at the top of this channel. So in essence, there's a good chance for a nice little bounce back. Plus, if we have a look here at Friday's highs, so if we go from that high to that low, even adding in fib here, we basically just shot through this 61.8% fib level here. Now, this kind of gives us a nice intraday setup in the event that this actually breaks lower once again. So if we actually see a nice little rejection at this high point here at 156, which is also the top of our channel, and then this can actually push lower and then break structure again here at 161.8, we could look for some nice intraday short positions. So that would come in anywhere from around here at 155.8 would be a relatively good starting point. And then as well, you know, just looking at potential targets, can have a look at this little range where we are now. So, you can, if we get a nice rejection, break lower, you can have relatively tight, like 30 pip stop loss. But there's definitely an easy 60 pip take profit opportunity before a next potential bounce even. So there are definitely some nice shorter term setups. You can even drop down to like a 5-minute time frame and look for the change of character with break of structure here. Again, I would just wait for this larger structure here to break first. So you want that trend break as well before actually just jumping into the market. So again, just wait for your price action to play out, and then you can take it from there. Traders, if you guys have any questions for me on this, please feel free to ask. It's why we're here. It's why I'm here to help. I'm not just here to go through the markets and say goodbye. The entire idea behind the live is to also assist you guys from a coaching perspective. So if there's anything you want me to look at, please let me know. And if there's any questions regarding what you are seeing on my analysis, also please feel free to ask. That is exactly what these sessions are for. So again, I'm not going to look at any buy positions on USD JPY at this point. Why? Because as stated, I want to break above 156.6. So this needs to break out and give me a clear break higher before we look for any buy positions from where we are currently. But a nice little short little retracement back down to this, 155.2, even maybe 151.5.1 area is definitely a possibility right now. Obviously, remember, not guaranteed. We're just looking here at what price action is doing. So you want that confirmation on the price action side first before you can actually get into the trade. So as always, wait for the setup and then look to capitalize from there on forward. See Rocast that leave me a comment here, says, thank you. The USD JPY on a 15-minute looks beautiful already. It really does. So this literally looks like such a nice setup. So hence why I'm popping this one into today's session, because this was just too good to pass up. So yeah, that being said, let's move on for today. If there's any questions, please feel free to ask and we can take it from there. So I want to move on specifically to cryptocurrencies, and probably one of my favorite cryptos to trade at this specific point in time is Ethereum, and also one of my favorites to invest in even at this specific point in time. And again, like I said, I'm not giving advice. I'm just telling you what I'm doing right now, and what is tickling my fancy, if I can put it in such a way. Now, Ethereum has had a volatile 48 hours, okay? To the extent that yesterday Ethereum was trading around 2,740, if I remember correctly. Now, that was down 10% on the day. So as I said earlier, it took a proper smackdown because of the fact that this was its largest one-day percentage loss since the 10th of October. Now, over the past 7 days, Ethereum has slipped about 3.5, 3.6%, trading in a relatively tight range between 2,620, which I'm going to show you guys now as my support level there, and then the higher part of that range is about 3,100. So, and it has been trading within this range now for some time, since about the 19th, 18th of November. So it's been some time now that we've been trading within this range. Now, some key points to note here, though, is at current levels, Ethereum still remains 44.8% below its all-time high of 4,955. And this is one of the reasons why this specific currency pair, for me, is a little bit more attractive than Bitcoin, because the fact that Bitcoin there's much more room for, let's put it that way. There's a lot more room on Ethereum for upward movement than there is on Bitcoin. Yes, Bitcoin has taken a massive pullback, currently trading in that $86,000 range, but it's not as far down as Ethereum, where just the upside potential on Ethereum is just so much more for me right now. Now, I know there's obviously that entire concept of proof of work versus proof of stake, which is why we have traders who are not fans of Ethereum and why we have traders who are fans of Bitcoin and vice versa. I'm kind of just always looking at this from a trader and investor perspective. So, yeah, but despite all of that, there is still a bigger picture context for us to look at here. Now, over the last 4 weeks, Ethereum is actually up 22.1%, which tells you how strong the prior rally was actually, that even though we had this big pullback, it's still up. Over the past 12 months, however, we are down roughly about 22.5%, which is highlighting ongoing volatility, not just in Ethereum, but in the broader crypto space. So today, Ethereum is trading around 2,800. It's actually like smack bang on the dot at 2,800 in a moment. So there's your chart for this cryptocurrency. And, it is up a modest 0.2%, as stated a little bit earlier. Now, this is signaling some stabilization after seeing some sharper drops. Now, forecast models are pointing to potential levels near 3,055 by the end of the quarter. Now, again, please, these are forecasts. They are not guarantees. So, there is, however, a potential for Ethereum to, by the end of the quarter, which is in less than a month, it's literally in less than a month, to be trading around that level there, which is 3,055. So there is definitely some upside potential here on the specific crypto, even just on the short term. Now, in the longer term, so if we look within the next year, so in the next 12-month period, projections are currently sitting at about 3,680, which is actually more or less this high point here that we saw earlier. Around the 10th of November. So not even that long ago, like a month ago. That's the current price level that markets believe that this specific crypto will kind of balance out at within the next 12 months. Now, again, please remember that these are expectations, not guarantees. So, in essence, what's the story here for this specific crypto? Now, Ethereum has gone at the moment from ouch to okay, maybe we're fine. So, in typical crypto fashion, it's having massive rallies with same amount of massive pullbacks. Now, we can frame Ethereum's current behavior using the range of recent moves. Now, that current range, as stated, sitting somewhere between 2,620, which is our support down here, and 3,100, which is this high point from late November. Now, the 10% drop has reset short-term momentum, but price is still operating within the wider 4-week uptrend, given that 22% gain over the past 12 months. Now, from a technical lens, from a technical perspective, Ethereum looks like a market that is digesting a sharp correction inside a larger recovery phase. The kind of move that keeps both dip buyers and risk managers equally alert. Now, if we have a look at this on a much smaller time frame, we can see that first things, we have bounced quite nicely on this support area down here. And if we drop this further down, there is now this, so there was that initial change of character. Now we have this period of consolidation. So again, if we can get a nice clean break of structure above 2,830, this could provide us with a nice little long position all the way back to, again, aiming for that end of quarter high that we spoke about at 3,055. Now, you can even have a nice little small stop loss, especially if you get the break of structure there. You can place your stops just below these low points here, and that will give you a very solid, that setup there, that's a very solid 1 to 3.5 risk to reward ratio. So definitely quite a lucrative trading opportunity, if I can put it in such a way, that we are currently seeing here on Ethereum, even from a day trading perspective. So I'm not going to say intraday, but definitely from a day trading perspective, there is quite some movement for a little bit, like I said, as per projections. That's kind of where the market sees this going by the end of the quarter. Now all we are waiting for as traders is the price action to confirm this. Once price action confirms this, then we can look at entering into the market with a setup that looks something or resembles something like what I'm showing currently on the screen. Again, traders, if you have any questions for me, please feel free to ask. I'm here to help. You guys are extremely quiet today. I don't know why, because we do have quite a bit of viewers here. If you are unable to comment, please remember, you need to subscribe. And if you haven't clicked that like button yet, please do so as well. I'd really appreciate that. Now, moving over to our final asset class for today, which is equities, as always. And today's index that I want to discuss is the US 30 or Dow Jones Industrial Average, which is reflecting a market that is trying to price in weaker data, including higher rate cut odds and a shifting risk backdrop. Now, US 30 is currently trading around 47,300, which is now actually up from yesterday's session. So it was down originally this morning, but now it's actually up. However, over the last 4 weeks, it's kind of been essentially flat, but it is still up 5.8% over the last 12 months. Now, yesterday we saw it falling 430 points, which was roughly around 0.9%. The biggest reason for these pullbacks were companies such as Merck, McDonald's, and Amgen, which kind of pulled down the index a little bit. Offsetting some of the weakness was gains in companies such as Walt Disney, Apple, and Nvidia. And the macro drivers here in play is primarily that ISM manufacturing index that fell from 48.7 to 48.2, as stated, which is a 9th straight month in contractional territory. So new orders, employment, and backlogs all weekend, specifically because of that CME blackout that we experienced on Friday. By the way, put your hand up if that CME blackout affected your trading on Friday. Like, just give me a holla. Like, yeah, that wasn't fun. Okay. And even from a broker perspective, sitting here in the office, being completely helpless because of the fact that that's the data center was also not fun. And also looking at my own trades and being like, is the market going up or down? Like, help me. with no clear guidance. So, yeah, like I said, put up your hand if you were affected by that CME blackout. And all of this is adding to concerns about momentum in that manufacturing sector. Now, on top of all of this, we have interest rates, as stated earlier as well, that is now suggesting that 88% probability of a 25 basis point cut next week. There's also uncertainty about the next Fed chair and candidates seen as potentially more dovish than Powell, which feeds into expectations for a softer policy stance in 2026. Then to just add the cherry on top, weakness in Bitcoin even affected the Dow's performance and the overall stock market's performance yesterday, as firstly, Bitcoin was down over 7% yesterday, dropping below $85,000, which this primarily weighed on crypto-related equities, namely companies like MicroStrategy, Coinbase, Robinhood, and various Bitcoin miners. So the Dow is trying to balance weaker data, rising cut expectations, leadership uncertainty at the Fed, and sector-specific pressure from crypto-linked names. Not exactly a boring mix. If we do look at the charts here today, I'm going to go to a slightly higher time frame to start things off with. This is also such a beautiful setup. Oh my soul. Price is currently trading around 47,330. Now, again, if we have a look at model projections, there is a potential for a pullback down to around 46,400 by the end of the quarter, and a potential pullback all the way back to 42,000. Which 42,000, I need to zoom out a little bit to see 42,000. So I need to zoom out a lot. So there is a potential for a pullback back to this general zone here by the end of or during the next 12 months. Again, projections, not guarantees. So short term, that latest little drop reflects a market that is pulling back after prior gains and now kind of jumping again from that support level as markets are reassessing risk in light of softer manufacturing and evolving Fed expectations. It's less of a, I would say, collapse and more of a repricing of optimism, if that makes sense. Okay, before I do look at lower time frames for some intraday setups on this, I also just want to have a look at the comment section as it all of a sudden got busy. So let me check there. Wow, that is about a $200 stop loss, even on the lowest lot size. So very lucrative. Yes, absolutely. And again, if you're looking at a 200 Rand stop loss and you're getting a 3-to-1 risk to reward ratio, and I mean 200 Rand, like that's almost a trade that anyone can enter in that regard. If we're discussing specifically now this little setup here on Ethereum. Now that setup there, yeah, that's a 200 Rand stop loss if you're using the lowest lot size, which basically almost anyone can enter, with a 3-to-1 risk to reward ratio. So that means your potential reward on this specific setup is in the ballpark of 750 Rand if you're risking 200 Rand. If you're risking 2,000 Rand, it's, around 7,500 Rand. Could be a nice little Christmas bonus. Okay. Again, projections, not guarantees. Information, not advice. Okay. As long as we're clear on that. I was part of that, but luckily did not have a trade in at the time. Okay, cool. That's at least good to hear. FX Beast, welcome. I had no trades that day. Lucky you. Lucky you. So, yes, makes perfect sense. Thanks. Okay, brilliant. Let's just head back quickly to US 30, just so that we can look at some intraday setups here as well. I want to drop it down to about a 5-minute. Now, on the 5-minute, we've seen here the change of character. We also saw the break of structure at around 10:45 at the moment. So this, I would say, if we can get just a little bit of a dip, not even something big, maybe a little bit of a dip back here to 280, just so we can get that ideal entry. Because we have that break above the smaller EMA at the moment. We have this bounce on the larger support. We have the change of character. We have the break of structure. So from a price action perspective, this is looking beautiful. So even if we look here, yeah, like 47,290, that would be an optimal entry for me. And then just aiming back up for this high from last night, even not even going for that daily high, just the high from last night. Just a little setup like that is looking at a 3-to-1 risk to reward ratio. So they're using, if you're risking 100 Rand, it's about a 300 Rand reward opportunity here. So again, based on current price structure and price action, we have bounced on the support. We have seen the change of character. We have seen the break of structure. Now, if we can just get a little bit of a dip so we can get that ideal entry. And the only reason why I'm saying a little bit of a dip for the ideal entry is because we did miss the ideal entry here at 10:11. So you just want to get as close as possible to that before getting into the market. So, and yeah, you can see the market's pulling back nicely. So it should give a nice little entry there. And then there's definitely some upside potential on this index as well. Okay. Any questions, traders? Anything you want to ask me? Anything you want me to look at? Please let me know. Otherwise, I think we can start wrapping up today's session. We have been going for over 30 minutes already. So, you know, as we are heading into the rest of the day as well as tomorrow, based on the discussions we had today, please remember that USD JPY is sitting at that junction of Bank of Japan hike expectations and Fed cut pricing and Powell's comments later today, which could tilt the balance. Plus, there's still opportunity for intervention from the Bank of Japan. Plus, we saw Ethereum is coming out of that 10% slide, but holding within its broader monthly up move, which any fresh volatility in crypto could spill into this risk sentiment. Now, again, there was some nice setups there as well. There was a nice intraday setup on USD JPY as well within that downward sloping channel. So please have a look at that as well. And then if we look at equities, obviously US 30, as stated, is digesting that weak manufacturing data and rising odds of a cut. And again, if the incoming data and Fed messaging shifts again, equity positioning may also quickly adjust. Okay. So, personally, I believe we're either going to see markets double down on the rate cut narrative or start asking if the slowdown story is getting a little too real for comfort. Okay. Wow, a lot of charts giving good potential trades. Is gold also there for a good potential? Broadcast, let's have a look. So, and I'm gonna kick things off on like a lower time frame as well. Oof. Gold is pushing down nicely at the moment. So this is a 5-minute time frame. Let's just go to about an hour just so we can get structure here. So we're obviously pushing nicely towards this all-time high again. We are trading. So there's a larger trend here. And then there is also a smaller trend here. So there's that inside trend there at the moment as well. So like I said, I just want to get all the levels out here and ready. And then that FIB basically just drawn from that high to that low to give all the little supports in the middle. So yeah, now you can see we have broken. It is pushing down quite a bit. It is approaching this inner trend line at the moment. So at that specific range, there could be two opportunities here. So if we can get a nice little bounce here, preferably touching the trend line, and then get that 5-minute, change of character, break of structure, and there is a possibility for a push back up even to this general area over here, which we even saw during the early hours of today. Okay, now markets are pushing down hard. That was a very big spike. Look at that on a 1-minute time frame. That is huge. So again, now what we are waiting for, we are waiting to see either a rejection or a break and a retest. If we get the full-on break and a retest and then a break, so remember, you want that break, retest, break of structure. If you get that, we could potentially aim for this strong low point here at 4,132. If we do get the rejection and a break of structure, and I would preferably want to break back above this 4,195, there is a potential for a pushback back to these higher points here at 4,230. And you can see there already, like, look how quick markets are starting to pull back already. So just even on the 5-minute time frame, look at that beautiful little rejection. So now you just want that pullback and a break higher again, so to confirm that move potentially back to this general area here, like I said, at 2,420, 2,440. I see FX Beast also asked for gold. Guys, does this make sense? So Rocast, FX Beast, you both asked for gold. Happy? Make sense? Yes? No? Anything you want to add to this narrative that I added here? Do you agree with my setup? Do you disagree with my setup? Just give me some feedback on that as well. Just waiting to see if anything comes through. Rocast, awesome. Thank you so much. FX Beast, yes, makes sense. Beautiful. Traders, I think that kind of brings us to the end of today's session then. So obviously, as always, the session is brought to you by ATFX Africa, the broker that gives you an edge in today's markets. So if you are not trading with ATFX yet, just click on the link in the description or head over to atfx.com and, well, go and experience the difference for yourself. Do you see I have a question? Do you think the upcoming news will have high impacts this week? So for me, there's only 2 reports this week that could potentially have high impact. It's the upcoming ADP report that will be released tomorrow. So tomorrow's ADP private payroll report, that could have an impact. And then on Friday, we're getting PCE. So I think that should also have a relative high impact on the market. We are not having NFP this week, so there's no NFP on Friday. There's no NFP next week Friday. So that data is not being given to us. And then obviously next week, Wednesday, we'll see the release of the new interest rate decision. That will definitely have an impact on the market. But for this week, I think tomorrow's ADP and then Friday's PCE will definitely have some impact on the market. Okay. Cool. Traders, thank you so much. And until next time, stay sharp, stay focused, and trade smart.